Uh, Good morning, distinguished attendees at this webinar. We welcome you as Deloitte, and we hope you're going to find this webinar very, very interesting, and it will be a wonderful time for knowledge sharing. So the purpose for issuing this guideline by the Securities and Exchange, by the Securities and Exchange Commission is to strengthen the corporate governance. And you can see from the slides that we have the evolution of the Investment and Securities Act. It started since 1962. The then unit in CBN has evolved to become the Securities and Exchange Commission. And you can see in 1979, it started growing through to 1999 to 2007 when the new current act was released. And in 2007, the Security and Exchange Commission attempted to strengthen further and to ensure that Nigeria adopt best practices regarding the issue of corporate governance. So the Security Sec then attempted to import some of the provisions that we have in Sarbanes-Oxley Act, Section 302 and Section 404, which now became our Section 60 to Section 63 of ISA 2007. And in that act, we have sections and provisions that are well laid out, but there was no guideline then that could enable any organization to implement. So it's been there since 2007, but because there was no guideline, it was not activated. Just recently, SEC decided to set up a committee on which I also participated, and Mr. Al-Hassan, who will be speaking after me, happens to be the chairman on the committee. And the committee has since finished the work, and we have sent to the Board of SEC, and the Board of SEC has approved, and that is what we are presently presenting or exposing to you. Now, we can see that in other jurisdictions, there are things that are quite similar to what we are doing. US, we all know the Sarbanes-Oxley Act has been there since 2002, and the US set up the Public Accounting Oversight Board, the PCAOB. They have been there implementing the SOX Act. Japan also has their version, China also has their version. But I need to say something here. Our own guideline on Section 60 to 63 is not completely same as SOX. So we should not get ourselves confused, because I've had people who have called me and say, oh, are we going full-blown SOX? It's not completely SOX, but it's a version or an adaptation of SOX. So the implementation guideline is quite clear as to what we are expected to do, and I don't think anyone should be confused about it. Section 60 of the guideline has to do with certification requirement by the CEO and the CFO. So they are expected to certify that they have ensured that internal control is in place, that the internal control has been designed by them, they have implemented it, and they have also made sure that it is operating effectively. And during the process of operation, it has been able to prevent material misstatement in the financial statement, and that there are no failure in control. And the guideline made it clear that if there are failures in any of the controls, the director, the CEO, and the CFO should indicate that in their report. And that report is to be submitted along with the annual returns that goes to the Securities and Exchange Commission. I need to let you know that entities that are obliged to do this are entities whose securities are expected to be registered with the Securities and Exchange Commission. So you will find that in ISA 2007. The laws are there as to who is to file their securities with the Securities and Exchange Commission. Now, Section 61 of the same Act talks about the duty of directors for internal control. It is well laid out what directors are expected to do with regard to design, with regard to implementation, with regard to operating effectiveness, and the fact that same directors are now expected to do a self-assessment. And after that self-assessment has been done, the directors are to issue a report on what they have done. You see, in the current dispensation, you discover that it is only the auditors that issue their own opinion on internal control, along with the opinion they issue on the financial statement. They do make mention that, oh, we have tested, we have reviewed internal control, and though it is management responsibility. However, but this time around, what is now expected, management themselves must also issue their own report on internal control, which they never used to do. The requirements of the law has changed now, and we need to ensure that directors of organizations that we belong to issue this report. Now, Section 62 and Section 63 of the guidelines have to do with the auditor's duty. Section 62, Section 63 says the auditor should ensure that they review management assessment. And while they review management assessment, the auditors are expected to also give their own report, what we call an attestation to what management has done. This is critical to the new reporting requirement, because the auditors themselves are expected to be registered with the Securities and Exchange Commission. So for your organization, you need to ensure that your auditors are registered. For now, gone are the days where any auditor just sign or issue report on entities that are to file their report with Securities and Exchange Commission. Because the moment your report gets to Securities and Exchange Commission, the first thing SEC will check is the auditor that gave this attestation, are they registered with SEC? That is the starting point. If they are not registered with SEC, then the report that has been issued on your entity's package that was sent to the Securities and Exchange Commission will not be accepted. And your organization will be penalized for having sent in a report that does not have a valid attestation. So that is critical for us to note, that the auditors, going by Section 62, had to be registered also with Securities and Exchange Commission. So the requirement of the guideline is quite clear, and the guideline has gave some guidance as to how we can as to how we can ensure compliance. Appendix 1 of the guideline has to do with the format for the certification that has to be given by the CEO and the CFO. So in that appendix, you will find the format. So you don't need to go too far. Such as put this document together as giving adequate guidance in that regard. And appendix 2 to the guideline has to do with the COSO framework itself, because the committee believe that we need to give some guidance in that regard. So for internal control assessment, we recommended frameworks that are globally acceptable. So the guideline clearly stated that where COSO is acceptable, there are other acceptable frameworks that we'll get to know in my subsequent slides. Then, sorry, I'm trying to move my slide. Okay, so now the guideline also talks about auditors' independence issue. We need to ensure that the auditors that give the attestation is independent of the process on which they are giving attestation on. So we don't want situation where you have the auditor supporting management to put up the process, and at the same time, the same auditor coming to give attestation on the process they have supported management to put in place. So the guideline referred us to the rules of SEC regarding prohibited services. So you need to note what are those prohibited services that will prevent self-review threats, because that is what the guideline is trying to prevent, self-review threat. You don't have the same auditor supporting management to do the self-assessment and audit. The same auditor happen to also issue the attestation report. So that demarcation must be there. And also, when it comes to regarding reporting material weaknesses on internal control, the guideline was quite clear that it has to be material weaknesses. So materiality is important. It is not all weaknesses that we identify. And again, it may not be all controls again that will be tested. The guideline was quite clear in giving guidance in that regard. And Appendix 3 that my colleague will be speaking on later gave details on how management will go about this evaluation process. Now, the methods for evaluating this internal control, it's well documented, as I've said, in Appendix 3. So please lay your hand on this document to be able to know how you can be guided regarding the evaluation process. Now, I mentioned the issue of frameworks that could be used. The guideline mentioned the COSO framework. It also mentioned the COCO framework, which is used in Canada, and mentioned the Tombu report too, the guidance used in the UK. The guideline now also went further to say, well, in future, other frameworks may be issued that will meet the same criteria that these three mentioned framework has met. So if that framework is issued in future, it will also be considered by the Securities and Exchange Commission as acceptable framework for internal control reporting. So in a nutshell, the guideline that has been issued is meant to express the provision of section 60 to 63, and it's clearly laid out what is expected of those who are responsible for the running of the organization, the CEO, the CFO, who are representing management. And also, it's clearly laid out a framework that is to be used, which meets international best practice, and is stated the director's responsibilities for internal control and how they need to apply the framework. And also regarding the auditors, that what is expected of the auditors, because auditors have huge responsibility in this regard. Management also have huge responsibility in this regard, so that the financial statements that are going out there are financial statements that has passed through very strong control processes, so that figures and disclosures can be relied upon, and the investors can have confidence in those information that are being issued. Then closing, I say there in the code that an assessment of effective internal control over financial reporting must be supported by evidential matter, including documentation regarding both the design of internal controls and the testing. That is the whole idea. Adequate supporting evidential matter of what management has said they have done regarding internal control, including the documentation. It has to be properly documented. What is not documented is not done. It goes beyond what you say you do. It has to do with what is in operation and how it has been proved with regard to adequate documentation. And also, we need to ensure that everyone that happens to be in the cycle of this corporate governance reporting are adequately registered with SEC. The entity is registered, and also the auditor is registered. We should not forget the role of the Financial Reporting Council too. SEC is playing a preventive role. FRC is playing a detective role. Both are responsible for the implementation of this guideline. So at this point, I will hand over back to Shugomi to bring in other presenters. Thank you. I'll wait later for your questions at the panel session.
Yeah. So thank you very much, Mr. Awada, for that wonderful presentation. And I believe the takeaway for me, as well as the other participants on this webinar, is that it's the responsibility of management as well as directors to ensure an effective internal control over financial reporting in their annual reports. Just to quickly move on, I would like to introduce our next speaker, who is the Deputy Director and the Head of Financial Standards and Corporate Governance, Mr. Alhassan Sulaiman Sude. He's a representative from Security and Exchange Commission of Nigeria.
Thank you very much, and good morning, everybody. As she rightly said, my name is Alhassan Sulaiman, and I work with Securities and Exchange Commission. And I want to thank the organizers of this webinar for inviting the SEC to be part of this novel achievement. Though we have always been collaborating, we equally thank Deloitte and other participants in the committee that they have served to be able to produce this framework on internal control over financial reporting. That aside, from the side of the SEC, much that we can say is just about the survival of institutions operating in the Nigerian capital markets. The major issue that we have been saddled with, as provided by the provisions of the Investment and Securities Act, is investor protection and capital market development. And to achieve that, we must be concerned with the going concern of institutions operating in the markets. And how can we ensure the going concern of these institutions in the market? We can only do that if there is a good corporate governance in that institution. And good corporate governance can only come if there is good internal control measures put by those institutions, and vice versa. So on that note, the Commission, having realized what has happened in 2001, where there are a lot of corporate scandals world over, and many other jurisdictions were coming up with a lot of legislation to ensure that they have safeguarded the interest and protection of an average investor. So SEC was not left behind. The SEC has made a move through the federal government of Nigeria to ensure that the Investment and Securities Act is amended to incorporate the control of internal control activities and good corporate governance in public companies and other key players in the Nigerian capital markets. So, but knowing fully that making an amendment or on any legislation, it may take a longer period, the SEC was so proactive to come up with a committee to provide for good corporate governance code. And that committee in 2003 was chaired by Mr. Peter Said, and they were quick to produce, and the SEC started implementing to guard against any unforeseen circumstances that may come through the scandals of corporate institutions. And it is in history in this country that most of the failure of most of the institutions came through the boardroom circle. And you just find out that a chairman will want to take over the control of an institution to the extent of working for an MD, working for the financial controller, working for the internal controller person, and all other things. And before you know it, there will be a lot of bronco in the boardroom, and many people are trying to take control. And as quick as possible, we try to implement that one. So in somewhere in 2007, when our amendment has taken place, as has been itemized by the first speaker, whereby we incorporated section 60 to 65, and specifically that dealt with issues of public companies. But when it comes to issue of internal control issues, section 60 to 63, that's where most of the activities took care, and where it has provided responsibilities for each and every officer that is in control of financial activities and internal control activities in a particular institution. So we have done that. Having gotten that, we just realized that with the incorporation of these sections, then there's the need for us to review our code of corporate governance. And that's the time that the commission decided to establish another committee headed by Mr. A.B. Mahmood in 2008, and they produced the code which was implemented in 2013 to 2014. And that aside, the SEC has not even stopped at that. We look at what is happening in other countries and other jurisdictions, and compliance, and then in collaboration with International Finance Corporation, we were able to produce the corporate governance scorecard, and we started implementing. But halfway as we are implementing, having given a moratorium of 2 years before we can start full enforcement and then rating institution, then the national code came around. And thank God we were part and parcel of the production of the national code. And we can be proud to say that over 85% of the national code is almost SEC corporate governance. We only complemented the SEC corporate governance, which is the national code, was what we have issued as a guideline. So on that note, we are all out to say that we are after safeguarding the interest of an average investor by making sure that the going concern of institutions are fully safeguarded. So this is the way forward for us to come up with this framework, and of which Mr. Odia, who was the first speaker, was fully active in it. But unfortunately, it has taken longer time before we can issue. And that's the reason why that to enforce this section 60 to 63 may not be feasible, because you cannot enforce a particular section without you providing the framework for people to comply. So on that note, the SEC is just after the survival of institutions, and we are after a good corporate governance in all the operating entities in the Nigerian capital markets. So on that note, I want to say thank you for that, and then the SEC will always be ready to make sure that we have made a good enforcement. And Olosunbi, I think if you really have any question, I'm ready to answer from that aspect of the internal control procedure and processes. Thank you.
Okay. Thank you very much, Mr. Alhassan, for that very insightful presentation. Not to waste our time, we would quickly move on. I would like to call on our next guest speaker, the Chief Executive Officer of Financial Reporting Council of Nigeria, who is ably represented by Mr. Adeshola Amao. He's the Deputy Director and the Directorate of Auditing Practices Standards for the FRCN. Thank you, sir, and you're welcome.
Thank you very much. Good morning, distinguished panelists and everybody participating in this webinar. I want to sincerely thank the management of Deloitte for organizing this webinar. It's quite timely, especially now that this guideline is becoming effective this year. I also want to thank them for the honor for giving to my executive secretary to be part of this program. Unfortunately, he couldn't participate. Right now, he's in Abuja, I think since Monday, attending to matter of national urgency. He is Ambassador Shuaibu Adamu Ahmed. So he said I should send this apology to you. Now, this project, this guideline, as far as I know, is a joint project with the then NESB. It's a collaborative project with NESB. It has taken so long a time for it to come up, but sincerely speaking, at FRC, we are glad that it's out now. And this webinar also, I believe, will make it to be more acceptable by the stakeholders. Now, it is important to note that the key mandates, or one of the key mandates of both FRC and SEC, is the protection of investors and the stakeholders' interest. So at FRC, we believe that this guideline is such a good initiative that will help both of us to achieve our mandate. Just like section 60 to 63 of Investment and Security Act 2007 require public sector to include in their annual report a report of management on companies' internal control system and to file the auditor's attestation on such report. FRC Act section 7(1)(f) also empowers the council to request for management assessment on internal control, including information system control, with independent attestation. So you could see that the two agencies, our main objective is protection of investors' interest, and also to ensure that transparency and credibility is entrenched in the financial reporting. So on the part of FRC, the enforcement of this document is a joint effort between SEC and FRC, and we are ready to ensure that it gains the necessary acceptability. So on the part of FRC, my executive secretary has given the Directorate of Auditing Practices standard to go ahead and put in place together with it, to put his team together to ensure that a similar guideline for the practitioner, because if you look at the, I think paragraph 1.6 of the guideline requires auditor to attest to the management report. However, auditors also need a particular framework to do the job. So a similar framework will be issued. We know because it is responsibility of external auditors and other people performing assurance services to give such attestation. So we're working together, and I can assure you that in no distance time, following the due process, FRC will come out with the guideline for the practitioner, because we know, just as I think when Mr. Oduwari was making his presentation, he mentioned that when management report is not attested to by the auditor, such report will not be accepted. So, and as we speak right now, auditors don't have any. So we are working together, and we can assure you that very soon we'll come, like I said, my ES has given me go ahead to put the team together to ensure that we'll come up with that guideline, and we'll do justice to that within a very short possible time. What we, like Mr. Alassane has also said, the responsibility of the two agencies is protection of investors in all forms, in whichever way that we can do that. And I'm glad he mentioned the issue of joint efforts of both agencies, even with respect to corporate governance. So we are ready to work together for the survival of the capital market and the investors as well. So thank you very much. It's just a short something on behalf of my ES, and whatever questions that may come up during the panelist section, we'll be much willing to attend to it. Thank you very much.
Thank you very much, Mr. Adeshola, for that very insightful presentation. The key takeaway from there is that, you know, that there's a key mandate by SEC as well as FRCN that the whole essence of the reporting in terms of the internal control over financial reporting is to protect our investors. Our next presentation will be anchored by Ibukun Beecroft, who is the partner within the Risk Advisory Department of Deloitte. So Ibukun, please, you have the floor.
Yeah, thank you, Shubumi, and good morning, everyone. Good morning to my fellow panelists and all the participants. We're excited to have you here. We've heard so much about the requirements of the code, and to really understand what are the next steps. I'll start with emphasizing on one of the frameworks, just like the last speaker spoke about, that there will be need for a guideline in terms of how the practitioners are going to go about it. But it's also noteworthy to mention that the SEC guideline made reference to the COSO framework. It recognizes the fact that the COSO framework meets their requirements, although it's not restrictive to the COSO framework. But then again, the framework is very elaborate, and it cut across all kinds of businesses, and it can be scalable. So the COSO framework, as it were, has 5 components and 17 principles. The framework helps organizations to effectively and efficiently develop systems of internal control that adapt to changing businesses and operating environments, helps them to mitigate risk to acceptable level, and also help to support sound decision-making and governance in the organization. You will hear from the prior speaker talking about the need for good governance and also protect all the investors. And that's the whole essence of this. So looking at the framework that as displayed on the screen, we have the control environment. The control environment talks to the policies, the procedures that organizations have put in place to ensure that they have a good control environment to help them achieve their objective. For example, management setting the objective, the tone at the top, to ensure that processes work effectively to achieve and also mitigate the risk. Also, it is a principle-based, and it provides for flexibility and allows for judgment in you designing, implementing, and conducting internal control. The question you will be asking is, my organization is not big, it's small. Am I restricted to this? No, you are not. But this framework provides a guidance on how you can set up your internal control if you don't have one. But if you currently have, it will help you to do a benchmark to be sure that you have all of the components in place, they are present, because it's important that all of these components, they are present and they are functioning, they are operating effectively. So as part of the framework, you also have the control activities. And the control activities, they are actions that are established through policies, procedures that helps ensure that management activities, they mitigate the risk to enable them achieve the objective of the organization. Also, there are different natures of controls that management put in place. You have the control could be preventative, it could be detective, and also the nature of the control. It could be a manual control, and it could be an automated control. And you know that our world today, we have a number of technology in use in carrying out most of our activities. So we're not going to leave out the need to have information technology controls to mitigate those risks that we're faced with by adopting the use of automated control within the system. Also, for information and communication, it also provides the framework that allows you to be sure that there is a process in place for relevant information and quality information that supports the functioning of other components of internal control are in place. So if an organization is able to put the structure, use this COSO framework, they will be more than likely have a strong internal control system. And truly, the internal control is also good for organization to help them have a sustainable financial reporting. You will reckon with me that the guidance of the code recognizes the need for organizations to look at the risks of financial misstatements. And if you're looking at the risks of financial misstatement, the question you then ask is, what do I need to do as a public organization? What do I need to do? What are the steps do I need to take for me to stay compliant, considering the timeline for reporting, because it's effective from 31st of December 2021. So organizations are expected to comply with this going forward. See me next slide. So having said that, we'll be talking about what organizations need to do. It's important for you to identify who your key stakeholders are in this case, to have an understanding of the expectations of all the key stakeholders. We've listened and heard from some of the key stakeholders. You have the regulators in the room who have told us their expectation regarding the implementation of this guideline. And also from an internal perspective as an organization, in order to put your team together to ensure that you have a seamless transition in respect to your internal control over financial reporting, you want to be sure that you have your audit committees, you have your chief executive officer, your CFOs, who are the primary persons that will have to sign on management attestation form. You have your finance function. And it is important to know that it is a collective effort of all of this stakeholders to be able to ensure that internal control is working and they are operating effectively. And all the internal assurance providers, like your chief audit executive, your chief risk executive, your chief compliance officer, even your chief information officer, these are key assurance providers within the business, and they are all need to be put in, all need to be aware and play their role with respect to meeting the requirements of the implementation guideline. Once that is established, everyone is now assessing as an organization, where are we? What is our current state assessment? It's important that a current state assessment is done. And how do you achieve that is to look at what exactly do I have in monitoring control within my business? How are my controls documented? Do I have policies? Do I have procedures? Do I have processes? Are they documented somewhere? But for ease of review, because your external auditors will want to review, you want to put together a framework that will enable them to easily assess what management has done and the testing. Just like Oduari mentioned, and even the code emphasizes it, that whatever is not documented is not done. So that needs to happen very quickly. The next one is for the organization. Once you identify your current status, you need to determine what next. And that will happen by you drawing a roadmap. Drawing a roadmap in terms of what do we need to prioritize as an organization to ensure we have a strong program of internal control in place that meets the requirements of this reporting. It's important to emphasize that the focus is on financial risk reporting. So we're looking at all the risk of likely misstatements within the financials. So you want to understand those processes that are involved. What are these key risks? Also, in terms of the reporting, you want to be able to set adequate timeline for yourself so that you are not faced with a situation whereby you do not meet the requirement the requirements. One of the key things that the code emphasizes is that there should be a report that is issued 90 days prior to the report. That means organizations, public entities, they have a short timeline for them to really implement the guideline, and then they need to report on the operating effectiveness of the control. This is a task that is tedious, but we believe that you can actually achieve that if you have the right partners in the room working with you to achieve this. Having said that, I mentioned the need to focus on the financial risk. I would like to touch on some of the key financial risks and what are the key account balances that organizations will want to start looking at. This what are the key financial, for example, you have your financial services, you have the banks, you have investment companies. These are just like highlights of what key accounts you want to start considering that may result into a risk of material misstatement. You want to perform a risk assessment on them to understand the impact of material misstatement. And when you talk about material misstatement, it's important to understand what is the materiality. How will I determine the materiality of this risk impacting my financial statement? And it's important that all of this risk and controls that you have in place, they are linked to the financial assertions, because the financial assertions are those things that you want to be sure that yes, they are add, you want to confirm and disclose that yes, the processes are adequately designed to mitigate the risk and they are operating effectively. Having said that, we need to look at how do you then scale your internal control framework or your ICFR program to focus on those risks. And there are things you need to consider. It's important to mention that the SEC interpretative code had two principles that they've emphasized. One is that it requires management to evaluate whether it has implemented controls that adequately address risk that a material misstatement or financial statement will not be prevented or detected. And the second one is that the management evaluation of the evidence about the operation. That means there should be a documented process, a documented risk and control metrics. You want to know the nature of the control, who are the control owners, who are the people that are responsible for this controls, and you can easily retrieve this information should your external auditors come in because they need to make an attestation on the controls. So to really identify and focus on those account balances, you want to understand the size and the composition of the accounts, because for you to really talk about material misstatement, the size of the accounts, the account balances, or even the composition of the accounts, the likelihood of the accounts due to errors or fraud, how susceptible are these account balances to fraud and error. You also want to look at the volume of activities. If it's an activity that occurs more frequently, how complex is this activity? And the homogeneity of the individual transaction. These are key things you want to consider when you're focusing on risks, because the code emphasizes on a risk-focused approach in terms of financial risk reporting. So you also want to look at the nature of disclosure. And you know, for Nigeria, we have the International Financial Reporting Standard that guides the extent of disclosure required for each public entities. So you want to look at those disclosures that are required. You want to know the nature of the transactions. Are they routine? Are they automated? Are they manual controls? And also, you know, for some account balances, there are some judgments you might have made on the account balances. For example, you want to make judgment around your contingency liability, as it were. You want to understand what are the processes around it. How do we arrive at that conclusion to say this is the exposure I have in that regard? Also, you want to look at the exposure to losses, and if there are accounts that are related parties, it's also important to note them. And also, if there are changes over time from for previous period, even on the standard, and you want to make the right disclosure, it's also important to understand that there also needs for to make consideration for multiple locations. You know, organizations do not just exist in one location. They have subsidiaries, they have branches that are located in different jurisdictions. It's important to understand the contribution or the significant contribution of each of these subsidiary or their or other locations to the consolidated financial statement. So that assessment needs to be done. Moving on is the still on the financial risk assessment assertion. I mentioned that earlier. It's important that when you're linking or even documenting your risks and controls that you've identified for each of the account balances that are highlighted, considering the nature of those account balances, you want to be sure that, yes, the control meets the requirement for whether it's existed or it occurs. You want to meet the assertions around the cutoff, the accuracy of the numbers, the valuation or allocation. They are especially for manufacturing industry. You have your inventory. You want to understand the process whereby they have used to perform a valuation of the stock, because this is a very critical account balances for industries within that space. You also want to look at the rights and obligations. If there are legal or opinion or things you need to disclose, you want to talk about it. And also completeness of the information. Does it meet the completeness assertion for a financial statement, and also the presentation and the disclosure. How does it align well with the requirements of the international standards of accounting or financial reporting? All this needs to be taken into consideration when the assessment is done. Like I mentioned earlier, that we will not lose sight of information technology control. It's also important that we start looking at all the systems, the general IT controls that businesses have in place. And to talk on this, I'll quickly yield the floor to Amala Udo, who is our associate director and leads our IT specialist reviews. She will quickly touch on where you need to focus on regarding general information technology controls.
Yeah, thank you, Ibuku. So we know that our IT systems, the applications that we have in our various companies, as well as supporting infrastructure, they form the bedrock of businesses in our world today. This has over time been a key part of the internal control over financial reporting. And as Ibuku mentioned, we know that COSO dedicated a component, the information and technology component of its framework to information technology, as well as dedicated or devoted 3 principles out of the 17 to information technology. In essence, the objective is just to make sure that the information produced by companies, especially those listed on the stock exchange, are reliable. They have, it's confidential, it has integrity required, and also available when required. And one of the key things that are important in our world today is there's greater use and dependency on technology. And most companies have advanced in the way that they have deployed this technology for use in their various companies. And so how this will be looked at will be from the general IT computer control areas. What controls have companies implemented, especially in the area of your asset security, your change management control, your data center operations? Is it possible that you are able to recover operations and continue in any event of eventuality? And on the other side, we also talk about, as part of this assessment, it's important to place emphasis on these IT general computer controls. It will not be done in isolation. It will be part and parcel of the whole wider review or the whole wider assessment of the COSO framework when we, as Deloitte, want to review or assess this for your organization. Ibuku has mentioned about what is in it, what companies are required to do from the perspective, and how Deloitte can also help you from our own perspective. And it's good to know that when you are doing, like indicating the controls that you have implemented, whether you, in the readiness approach, how we try to do it is to map what you already have in existence. Do you already have IT controls that can help mitigate risk, that can help you turn out reliable numbers for your financial reporting? Another area will be to align these controls that you have. Are we able, or can management be able to align it to the requirements of the COSO? The next step will be the implementation, and that will be, in whole essence, how are we able to, in line with the whole wider perspective, take you in a roadmap, like Ibuku mentioned, to where you are supposed to be, and when you are issuing your report, as required within the 90 days prior to you turning out your end of year financial statement, you're able to say that your controls are free of material misstatements, your numbers are free of material misstatements. So that's it from us, and thank you for your time. I'll yield back to Ibuku to continue. Thank you.
Thank you, Amala, for providing that insight on general information technology controls. I will not leave you without any support, and that is where we come in as Deloitte. As Deloitte, we have the process in place. We've been there, we've done that. We have a program for helping organizations to ensure they have a seamless transition into the program or even implementing the guideline. We have a technology that we're going to leverage on. We also have a global network that we will leverage on to support you should you need the support to get yourself ready for this assessment and make it a seamless one for your auditors. Because at the end of the financial year, you wouldn't want to have a qualified financial statement regarding internal control over financial reporting, because this might impact on your investors and the users of financial statements on the organization. So all hands has to be on deck. And we have not just myself, we have a multidisciplinary team that can support you to help you achieve this timeline in good time. So what we'll do for most of our clients to help them run this process seamlessly is to talk about our approach. We put together a 6-phase approach that will help our clients, and which organization used to draw their roadmap is to, first of all, identify the key stakeholders, like I mentioned earlier. And then again, you move on to your risk phase 2, where you do your risk assessment and look at the account balances and processes that should be in scope, taking into consideration some of the things I've mentioned. And then you need to document all of this. And to document this is for you to do a walkthrough within your risk and control metrics to really understand how those controls are working, who handles the process, what process do you have in place, what documentation can I lay my hand on to confirm that these controls are working effectively. You want to know who the process owners are, and that can only happen when you have a walkthrough with the key process owners. Once that is established, then you're able to move to the point whereby you do a control design testing. It's important to know that organization needs to be aware of that how the adequacy of the design of the controls. You know, you may have different account balances, and there are multiple controls that help to address that risk. And that's why it's important that a mapping needs to be done, a mapping of each key financial risk to the controls that will mitigate it, and even identifying the design of the control. So if I take, for example, a particular control and the design is not adequate, at that point, you will not go ahead to further test. And at that point, you need to start thinking of what other controls do I have? Do I have in place? What are the compensating controls do I have in place to really mitigate this risk from occurring, or to satisfy the requirement that, yes, I have something that would not allow this risk to crystallize, because the whole essence of this is to ensure that there is no control failure within the system. So once that is done, we'll be able to move to the operating effectiveness of the control. And that is what the guideline is really looking at, to test the operating effectiveness of all the key financial account balances, and then report on them. And because it's a first-time adoption for most organizations, depending on your maturity level for your risk, for your control environment, there might be instances whereby some of these controls are not adequate. Then you need support in terms of who will help you to do the remediation of these controls by providing recommendations. It's important to note that your external auditors will not be able to do this for you, because the code emphasizes the need for external auditors to desist from performing management role, because if management is helping with internal control activities, then there is a risk of self-review, and it will pose a aspersion on the report or the opinion they are issuing as external auditors. Then it's important that when you're implementing this guideline, you always make reference to the interpretative guideline. The code has emphasized what the interpretative guideline should be, and is included in Appendix 3.1. And under Appendix 3.1, it talks about the evaluation process. So what we have done in a nutshell is to summarize what organizations can quickly do for themselves in order to meet with this guideline. And that's the starting point. Is first, you have to map all of these key controls. you want to align them and also implement. And how do you do this? You want to determine your materiality. So for most public entities, they will determine materiality probably using the profit before tax. So, and also considering some of the things I mentioned earlier, you want to also identify what are these significant accounts and disclosures that you require, and how are they relevant to each of the assertions that I've touched on earlier, and then link them to the significant processes, and also identify the systems, because there are a number of system controls, so that you are identifying all the systems that needs to be assessed. You want to check if there are data centers involvement, if there are asset security, the system change control, and what have you. And once that is done, you then move to the process whereby you do the assessment and then the recommendation. And that is where you do your walkthrough, your design testing of your operating effectiveness, and do a remediation and roll forward testing should it fail. The question will be, why a roll forward testing? If peradventure before the deadline, you have done your testing and some controls have failed, you have opportunity to remediate it before the financial close for that year. And that's where you have mitigate and remediate. So you want to be able to track and develop remediation plans on ongoing basis throughout the testing period. And you can use an automation to help to do the tracking for all of the testing, so that you are not leaving any stone unturned. Also, it's important that we'll collaborate with management to determine and document the remediation steps that will be the final agreed upon deficiency. You know, the code emphasizes that there is a need for disclosures about material weaknesses. So if after all the reviews or the recommendation, there are still material weaknesses, you have to disclose these material weaknesses, because the code does not allow you to state anything like limitation of scope. You have to be able to disclose everything and be sure that, yes, the controls around financial risk have been adequately covered and that they are operating effectively. And it's important that while we're supporting you, should you prefer to use Deloitte, and you know Deloitte is the #1 brand globally, and we have the expertise, the experience to support you to do this. If we had to do this with you, we're going to work with your auditors to ensure that the materiality or even the key account balances they'll be looking at are already agreed, so that it's not be a case of this is the materiality management has considered and this is the materiality the external auditor is considering, and then there'll be a concern around the kind of testing that needs to be done. So it's important that that alignment is done from the onset. So at Deloitte, we have several templates that we can use to support our clients to achieve the ICFR program. We have our risks and control matrix, and you know the risks and control matrix is it's a template that will help to pull together all the information that you require for your ICFR testing. We also have an automated control testing tool. The automated control testing tool serves as a key accelerator within a system implementation or upgrade engagement, because it provides a quick automaton assessment of configure internal controls and segregation of duties, because these are key things you want to be sure that they are in place when you have a system implemented or an application within your business. We also have different templates, just to mention a few. I would like to say, closing, to say that yes, we're bringing a fresh perspective to ICFR program in Nigeria, and where we are best suited to serve you in this regard. We bring insight, we bring knowledge that we have gained from helping organizations with large ICFR program, and we're going to use a technology-based approach to help you with this implementation and optimize the program for you. You can check it. It's all over. We're the leaders in ICFR modernization program. We have our global network that we're going to leverage on, and we have the experienced team who will bring the right perspective on how to do this for you as a client. And don't be afraid, we're very, very reasonable when it comes to pricing. Thank you. And we're happy to take your question. I'll yield the floor to Shibomi now, and then we'll go to take your questions.
Okay, thank you very much, Ibukun, for that very insightful presentation. I mean, it basically touched on key things that management needs to know in ensuring that their internal control over financial reporting operates in an effective way, such that when this is reported in their annual reports, the attestation would state what the requirements of the regulators prescribes. Okay, so just to quickly move on, we would, we're going into the panel session right now, and the panel session will be moderated by Ibukun Beecroft. Would have our speakers as well as some of the other panelists that would be joining for the very first time during this session. So I would like to introduce Mr. Owadia, who would be one of the panelists. Amala Udo would also be one of the panelists, and we have Mike Oshinoye is a partner in Deloitte. It would also be one of the panelists. And our representatives from SEC as well as FRCN, they would also be joining us for this session. So Ibukun, you will be moderating and would take it up from there. So for audience that have questions, I've noted some of them, but please, if you have more questions, kindly put it in the question and answer chat box, and we'll pick it up from there so that we can allow the panelists to answer some of the questions that we have from their presentation. Thank you very much.
Okay, thank you, Shibomi, and thank you for introducing the panelists. And to my panelists, thank you for the time that you have taken now to be part of this insightful session. How are we going to go about this session? First, we will take questions around the room for each of the panelists to respond to. And once we're done, then we will go to the question and answer session to attend to each of your questions. We hope to answer as much questions as possible. Okay, I'll start with Mr. Al-Hassan from the Security and Exchange Commission. I know that one of the emphasis of having the implementation guideline is to continue to foster good corporate governance in financial reporting and also sustainable financial reporting. If we're talking about sustainable financial reporting, the question is, based on the new guideline, we observe that SEC noted that some control frameworks can be adopted. Is there a restriction to just using the COSO internal control framework for companies to adopt?
Thank you very much, my sister. I want to say that Mr. Audrey is part and parcel of the committee that was constituted, which was a market-wide committee. And the membership was drawn from different organizations, which include but not limited to Securities and Exchange Commission, Central Bank of Nigeria, Corporate Affairs Commission, Deloitte, ICANN, and so many of them. And it was based on the review of some of the documents that we have gone through, in particular the COSA, the United States Management and Internal Control Reporting, and the guidelines issued by the United States Securities and Exchange Commission. We just look at it that going with our jurisdiction, the one that covered most of our requirement is more of COSO. And we look at it that COSO is more generally acceptable world over. So we believe Nigeria should not be put aside to say that we are doing another thing, but there is no restriction. This one is only advisory, that we feel that based on the review that we have made, and it was a decision and then advised by the committee, not necessary to say that this is just an advice by the Securities and Exchange Commission in Nigeria, but we look at it because it's a committee of professionals and they know what they are going to look when they are on ground. So with that, we just saw that COSO have already covered most of our requirements. But that notwithstanding, in terms of smaller companies, they may assume that maybe using COSO may be so expensive for them. But when you look at it, it's scalable. You can scale it to your own internal use depending on your own size. So we are not restricting. There are other frameworks that were issued. In particular, maybe just like the Canadian and some other frameworks that were issued, and the COCO and whatever. But that notwithstanding, what we are just after is that there are two parameters that you should look at in whichever framework that you choose. Is it suitable and is it recognized? And suitability in this case, we are just thinking of that. Is it free from bias? And is it consistent in terms of qualitative and quantitative measurement for the company's internal control? And will it be sufficient to complete so that those relevant factors that will alter a conclusion about the effectiveness of a company's internal control are not omitted? And it should be relevant when it comes to the evaluation of internal control over financial reporting. And in terms of recognition, that we are just looking at that, it should be established by a body or group that follow due process procedures, including the broad distribution of the framework for public comments. So these are the reason why that we took the COSO, because we saw that it's so robust and it covers most of our requirements. But that notwithstanding, depending on the decision of the board, management, and other key players in an institution, they can choose the framework that they feel that it suits much of their need, much as that it has these two parameters. So this is the little that I can say.
Thank you very much. You said a lot, not just a little. And I think the key takeaway from his response is that one, it's not restrictive. You need to look for a framework that is suitable, but it's advisable that you use the COSO framework because of the scalability and flexibility. But should you want to consider other framework, you want to ensure that it is recognized by a body, it is relevant, it is sufficient, and it can also meet the requirement for both qualitative and quantitative measures for reporting on internal control over financial reporting. Thank you very much, sir, for that question. So I'll move very quickly to Mr. Amao from FRC. From your end, I'll start with asking question. As a regulator, you have issues on independence. So I want to ask that how should a case of disagreement between management and external auditor on material weakness in internal control should be resolved? I touched around materiality. How is it determined? What would be your advice to companies, or even to auditors, or even to consultants that are working with management to help them review the ICFR program?
Thank you very much. So when such situation happens, it's important that both the management and the auditor, they resolve it in a more collaborative manner. It's expected that when an auditor is doing his job, if you look at ISA, I think 260, talking about communication with those charged with governance. So auditors will be able to establish who are the people that need to communicate to when a situation like this happens, and to sit down and establish a proper way. Now, if there is a reasonable possibility that that misstatement will occur, and it is material and is going to affect the operation and even the report, it is important that both the management and the author should sit down and resolve it. Where it could not be resolved, we've had situations where either the auditor or the management writes to regulators to resolve some issues. So I think it could be done in that manner. Thank you.
Yeah, thank you very much. I think the key takeaway is that collaboration. So there should be discussion and shouldn't see it like a police in the room, but collaboration with the key stakeholders in terms of financial reporting within the business and that of the external auditor. Having said that, I'll quickly move on to Michael Shiloye, who is one of our partners in the audit and assurance team. And I'd like him to explain to us what your expectations will be for public companies as their external auditors, because your external auditors, you're going to be making an attestation on the internal control over financial reporting. What would you expect to see when you go in for your audits as external auditors?
Yeah, thank you very much, Ibukun, for that question. Our expectation of client, prospective client, and every organization within scope of this guideline is very simple. Every organization by now should be putting together its evidential matter as stated in the guidelines. As we all know that audit is all about gathering audit evidence, to support the attestation reports to be issued by the auditors. So as a result, I will expect organizations to be putting together their implementation roadmap by now, current state performing their current state assessment, doing gap analysis, benchmarking their existing internal control over financial reporting with their chosen frameworks, because they need to choose a particular framework upon which they want to base their ICFR upon. Then they also need to be doing their readiness assessment, and they should also make sure that this is done on a timely basis, So because this will lead them to the design and implement, the testing of the design and implementation of control, and subsequently testing of effectiveness of the control. Because before auditor will issue the attestation report, there will be need for us to see the evidential matter as to what management has done about the assessment of the effectiveness of their control. So it is for us to rely on their own assessment. There is need for them to provide us as external auditor with all the evidential matter for us to review before we can issue the required attestation report.
Yeah, thank you, Mike, for that. But before I move on from you, will you be performing a re-performance on what management has put together, or you also do your independent testing, just for our audience to be aware of what they need to have in place?
It will definitely be a combination of re-performance and independent testing. It all depends on the type of control that we are looking about. We are talking about. So some controls might require us as auditors to perform that control independent of management, and some controls you may just observe what management have performed for us to place the reliance, the expected reliance on what management has done. So definitely it's going to be a combination of re-performance and relying on some of what testing that management have done.
Thank you very much, Mike, for clarifying that. So very quickly, I'll move to Oduare, because, it was one of the key resource person that helped to put together the implementation guideline. So, considering the reporting deadline that all companies are expected to have completed an evaluation of their internal control within 90 days prior to the report, please explain how the companies can meet this deadline. And I also have regulators in the room. Please feel free to jump in, SEC, if there is any feasibility or change or enforcement. We want to really hear from you. I'll start with Oduare, and I would like Mr. Al-Hassan to also contribute to this.
Okay, thank you, Ibukun. Meeting this deadline is tough for companies that are reporting 31 December 2021. For entities reporting 31 March, it's still quite a time for them to work around it. But for December year-end entities, it's quite tough. Well, what they need to do now is to quickly go into reviewing, refreshing their entire processes, and when they are refreshing the entire processes, they need to focus more on processes that would impact on the financial statement. Let's start with, because even the guideline knew that there might be no time. So the guideline says focus on material transaction, material balances, and after identifying material transaction and material balances, then again, focus on those that are exposed to risk of material misstatement. So in the final analysis, we may not need to do everything for this first year. So pick your financial statements, or what are the material balances of your financial statement, what are the material transactions that feed into it, and after identifying that, then you then ask yourself again, do we have risk of material misstatements here? If yes, focus on those in this very first year. And when that is done, you will see that you might be able to work within this 90 days period. And if we are saying we want to work within that, it means that every organization should start the testing by 1st of October. By 1st of October, that would be, so if you are to start your management assessment by 1st of October, then by now you should have been done with everything that had to do with planning and also documentation. Documentation is key. Remember that before you even start management assessment, you must have completed the documentation process. So this period of July and August, entities should be looking into documentations of their processes, documentation of their controls, matrix checking, ensuring that the assertions are all in before management starts the assessment in 1st of October. It is quite tough, and but it's achievable. For companies that are regulated, they might not have much problem because they must have been doing some of these things, but it might not be within the framework of COSO. Now they just bring it within the framework of COSO. But for entities that are not regulated, I can assure you there will be issues. But the consultants are there to support.
Thank you, Oduare. The key point is you need to start now. Do not procrastinate and get the right support where required. I also like Mr. Al-Azan to touch on this because of this deadline. What is SEC saying about this? And yes, we know you've issued the date for implementation. We want to hear from you, sir.
Thank you very much. The issue is that in terms of reporting, the periodic reporting, or which I can call statutory reporting, audited financial statement is one of the statutory reporting to the Commission. And what the rules and regulation provided for the Commission is that 90 days after the year end of financial year end of each public company, they should submit this report. Now, a new version has now came in that the issue of internal control reporting need to be part and parcel of this audited financial statement. So what I can only say is that the auditors and management and the board need to come together to ensure that at least they have beat the time as provided. Because the moment that, unless otherwise they give a sufficient reason why they could not comply in terms of submission, then the normal rules and regulation will now apply. Yes, we can understand it's a new thing, and then this is a learning curve, but that notwithstanding, there's always room for achieving whatever that you decide within a specific period of time. So I'm now craving the indulgence of each and every key player to make sure that he has complied within the frame time that we have already provided, because we have to look at so many things before we can come to that particular date. And we have always been doing, and we believe with the kind of auditors that we have currently in the market, of which we have no doubt about their professionalism, we believe they can achieve that one, even though it could be for an additional fee, but that notwithstanding, then what is good must be good, and then we will be good to go. So I think if there is any delay from any company in terms of submission, it's left for the company to go and iron it out with its own external auditor. Ours, we are looking at the public company to ensure that whatever is required in that financial statement is provided. So I believe if there is any delay, the normal penalty may likely be applied, unless if there's a good reason to say that we should not charge that penalty. Thank you.
Thank you very much, sir. I think you've really clarified that point. So organizations, they need to start. They need to work collaboratively, the auditors, the directors, management, and the people they are working with to ensure they comply. They need to start. Yes, it's agreed there is a learning curve, but what needs to be done should be done to meet the requirement. Otherwise, you will be faced with the applicable penalty for not complying. We've heard that directly from the SEC representative, and the belief that is important to work towards it. And I like the fact that you mentioned that, yes, it's a tough one, but it might mean just additional fee from your pockets. And like I said earlier during my presentation, our fees are very, very reasonable. Okay, moving on very quickly because of our time, we'll I'll ask Amala Udo to really explain to us regarding the general IT controls. I know she explained during the presentation, or specifically I want her to really enlighten our audience around where there are instances of a control failure. What can organization do for the remediation in terms of internal control over financial reporting?
Yeah, thank you, Ibuku, for that question. So it's good to note that controls can fail, controls can pass. You know, you already highlighted the approach in terms of when you start with a risk assessment, you go down to the walkthrough just for you to understand how the control has been designed. You move ahead to do the testing of the implementation as well as the operating effectiveness. Controls can fail, and when they fail, the next step for someone to do is to check whether there are mitigating controls or compensating controls. Mitigating controls in this instance, assuming there are instances where the control itself may be preventive, just like Ibuku mentioned during her presentation, you have preventive controls, you have detective controls. When a first level control fails, you can in the process determine whether what can suffice for that control may be a detective. Example, if you are in the process of issuing approvals before something is done, that's a preventive. You don't want a situation where something happens in the first instance. But assuming something has happened, the next thing to check is whether there's a review type control, which is detective in nature, that can suppress that risk that you have identified and able to take it to a minimal level and able to allow the control that was shaken in the first place or has failed in the first instance to then pass. So the key thing there is to check whether there are mitigating factors, whether there are compensating factors, and then try to see in aggregate how these can try to bring the control to a successful operating effectiveness. And this can help, just like Ibuku mentioned, in the remediation and validation process. Thank you.
Okay, thank you, Ambala. So the fact that a particular control failed, that doesn't mean that's the end of it. There are remediation, there are compensating controls that you want to really check to be sure that, yes, that control is operating effectively, because the whole essence for the reporting for SEC, for this guideline, is that all controls around financial reporting, they are adequate and they are operating effectively. And to know that the CEO, the CFO, they're going to be signing is like signing under oath. So they need to be sure that, yes, all the controls are working effectively, meaning that all hands has to be on deck. So moving on very quickly to Mr. Al-Azan again, it's a privilege to have you as a regulator in our midst. And you know, some of the things I've seen from the questions that have come out is that how we SEC monitor compliance of this ICFR reporting, because we know the Nigerian environment, and like you mentioned, is not a one-off exercise. It's something that it's continuous reporting that we will need them to know how we SEC monitor compliance. Will it require to do a retest of all of these controls, or will they rely on the external auditor's opinion? We'd like to hear from you, sir.
Thank you very much. Even before the coming of internal control framework, SEC as a regulator, we have our way of ensuring compliance and monitoring compliance in the markets. And this one should not be a different way of doing it. We have two different ways, either on-site or off-site. The on-site we have to be at the point of production, which is the companies, and where they need, we visit the external auditors' offices. And depending on what we really wanted to look at, then we ask, and then we do our assessment and come back and do our report. And whereby that there's need for sanction, we sanction people, and even it may even involve even if it is a capital market consultant, even withdrawing his or registration, depending on the magnitude of what he has committed. And likewise for the company, that it can be even payment of financial penalties or any other thing that may warrant, depending on the officers who are taking liability of that particular submission. And on the other side, the offside is that based on the submission that you have made, then we do our assessment and we do an observation letter, we send it, and then you confirm that this is the reason. And if we saw that it's sufficient, whereby that there's the need for us to bring some corrective measures, then we correct you for way forward. And even for the on-site, it is of two types. There is what we call routine, and then there's what we call targets. Based on the submission of your report, after the off-site review, then if we saw that there are certain group which we need to target, then we move on without even telling them that we are even coming to the office. We just move in and then seek for whatever information that we are looking, and then we just take our own position in terms of regulatory sanction. On the other side, the routine inspection, that you will be informed way forward that we are coming to check some of their books, and including all those issues that I have already submitted to the commission, and we have an exit discussion and give you some corrections and way forward how we wanted the SEC to be receiving most of your informations and whatever. So these are the way and manner that we normally try as much as possible to monitor compliance, and we are getting it right in that regard. So, and this one will not be an exception. So if we really wanted to ensure that people are complying, then we go through these ways, either offsite or onsite, depending on whatever that we are looking for. So this is the little that I can say.
Thank you very much for that. And I want to believe all our participants are listening, that SEC is going to follow through. It's not just a tick box exercise. They're going to follow through, and they can do that by having an on-site review or even having an off-site review. And even the external auditors are not left out of this. So we all need to be ready, and you all need to put your books in shape, because you don't want to be a target. And target meaning that there may be some things that they have the knowledge of some information, and based on that, they will move into action without notifying you. And they can also go about it by having a routine inspection. And if they find that organizations are not complying, they would bring in their rod of sanction. So I don't think any organization wants to be sanctioned or being on their list because of the reputational impact it will have to either the organization or even the stakeholders involved. So we all need to be ready to comply with this requirement, and it is an ongoing thing. So we'll open because of our time, we'll want to quickly open the floor for the questions we have in our question that people have sent in, the question and answer session. So I would like Shibomi to help to read out the question, and I can direct the question to one of the panelists to answer. So if there are questions that we have answered, we will want to repeat it, but we'll try to still touch on this. Okay, Shibomi, please help to look at all the questions. The open questions, let's read them one by one, and we'll mark them complete, and then we can answer.
Okay, thank you very much, Ibukun. So the first question, how will an organization know the audit firms registered with SEC?
Okay, I will give our regulator the benefits to explain how organization can know which auditor is registered with SEC. And also, Mr. Amao, you also have that. I know FRC does a lot of registration, so I want Mr. Amao to take it, and then Mr. Alazan also talk to that point, please.
Is Amao to go, or I should start?
Either way is okay.
Okay, so I want to draw the attention of the person asking the question. Immediately that he has gone to the website of SEC, you will see the list of all capital markets operators that have been registered by the Commission. And if you really want, he can go to any of our offices, be it the head office or the zonal offices. He can still obtain the list of those people that have been registered. This is that I can say.
Okay, thank you, sir. Mr. Amo, please.
Yeah, thank you very much. The question mainly is for SEC, but for FRC, I think if you look at our FRC Act and even the audit regulation that currently we newly released, it's important that auditors are registered with the FRC. We are starting that very soon. Before now, it has been professionals, individual professionals that have been registering, but the audit firm will start registration of audit firms very soon.
Okay.
Thank you.
Thank you. Okay, Shubumi, next question.
Okay, so the next question, for the purpose of financial reporting, who should test the adequacy and effectiveness of internal control?
Okay, I would like Oduare to help us to take that question.
Okay, thank you very much. It is the responsibility of management. It's clear in the guideline. It's also clear also in every legislation that has been issued, that the responsibility for the design, operating effectiveness of internal control is that of management. And they have to ensure that this guideline is just adding to it again to say, yes, you are responsible for it. But in addition, you will now have to do a self-assessment and give a certification. That certification is holding you to what you say you have done. And if it eventually happens that you didn't do it the way you have reported it, then it could lead to certain litigation against those personalities and the entities. So it's management.
Okay, thank you, Oduare. So it is clear management are responsible for testing ICFR, but looking at the timeline, I can tell you it's a very cumbersome task and you have support from Deloitte to help you achieve this timeline. Okay, Shubumi, next question, please.
Okay, so the next question. So based on the guideline did not specifically detail the role of the internal audits in ensuring full compliance. How can internal audits specifically help without compromising their independence and objectivity?
Do I want to, I don't know, anybody in the room who wants to? Yes, you can go ahead, Oduare. Yes.
Okay. Internal auditors are part of management. There is a difference between internal auditors and external auditors. So internal auditors, they are part of management. For this process, they support their management. They are not compromised in this regard. Because most organizations, they use internal to identify risk. The internal auditors does the control checks, control testing. So they are part of management as far as this is concerned. But if you mention external auditors, they can be compromised.
Just to add to what Oduare said, you know, as internal auditors, they have two roles that they perform. They have the consulting and assurance role. So from a consulting role as internal auditors within their space, they can support management with helping to test the internal control over financial reporting. And you also have other assurance providers within the business. You have your risk and compliance team who can help to put together the controls or even the risk assessment and the control assessment. And even the code also made mention and reference to control self-assessment. And that will address all the controls, the low risk controls, so that you are not leaving any stone unturned. You are confirming that yes, controls are operating effectively. Shubumi, very quickly, next question.
Okay, so the next question, given that, so based on the requirements of the code, would another report be required from the directors on the internal controls apart from the certification reports? Also, are internal controls reports required for interim reporting as well?
Okay, I would like the SEC representative to please help us to share more light on this question.
Well, the issue of interim reporting, that there's the need for another report for internal control. This internal control is mainly for an annual assessment, and it's eventually the work of an external auditor to do that. And when you are talking of interim report, unless if you are a bank, I don't think that within the financial industry that any other person is now required to make any external auditor's review before he can submit his interim report to his own regulator. So I can say that there is no need for this particular submission when you are submitting your internal interim report to the regulator. Yeah.
Thank you very much, sir. I think the key takeaway is that it is an annual report, and that the people that are saddled with signing for management is the CEO and the CFO. They're signing on behalf of management and represent all the other stakeholders. They're signing on behalf of them. And it's an annual report that should be filed when the report is being, the account has been reviewed and filed for the regulators. Very quickly, Shubhumi, let's take some more questions before we close.
So is it compulsory that only the external auditors can review the management reports on internal control over financial reporting?
Okay, Ojuare, do you want to take that? And I can also add to it. And also, Michael Shiloye, you may also want to contribute to this question.
Okay, the guideline says the external auditor, section 62 and section 63 says the external auditor who is registered with Securities and Exchange Commission. So Mike, take it up from there.
Thank you very much for that, Ojuare. You are very spot on. ISA, the act is very clear. Section 63 made reference to the fact that it is the responsibility of external auditor to review management assessment and issue an attestation report. So it is the responsibility of external auditor, to do the assessment and issue the report.
Okay, thank you. The code is clear about this. Shubhumi, next question, please.
Okay, so the next question speaks to if this is also applicable to private companies. Does the guideline also apply to private companies?
Okay, so I would like the FRC, Mr. Amau, to help us take this.
Thank you very much. I think it could apply to, because if you look at the activities of FRC, we have the obligation also to request for such report from any company as far as you are covered under the PIE. So our activities go beyond listed entities. So it will be required of small, let me not say small company, of other companies other than listed entities to also make such reports.
Thank you very much for that clarification. So in as much as FRC will require this, yes, it is required. And I can assure organization that the whole idea is to ensure good corporate governance. And I think that is where the FRC is coming from. And it is a good practice that organization should really embrace, because it plays a lot of reliance on the controls around the numbers that are being presented in the financial statements.
Let me just add something, and I want Mr. Al-Hassan to also speak on this. The guideline says entities
that
securities are registered
by the commission
or are required to be registered under the Investment and Securities Act. So if you have a security that has to be registered with SEC by virtue of the SEC operation, then you are, whether you are private or public, you are caught up in this guideline. So I will allow Mr. Hassan to speak on that.
You are right, and that's the provision. Much of that your securities is registered or will be registered by the commission, then you are part and parcel to comply with this framework. Thank you.
Yeah, thank you. So the key word is, as much as your securities are registered with the Security and Exchange Commission, you are expected to comply with this implementation guideline. Or if you are thinking to, you are expected to comply with this regulatory guideline. Shibomi,
Okay.
next question.
So next question, is this cycle for every year-end reporting, or is this one-off? Are institutions expected to go through this cycle before attestation?
Okay, I think we've answered that question somehow. And just to repeat, I would like Mr. Alassane to emphasize that point again.
But I think the report is said to be an annual report. So if it is an annual report, which means it's not just a one-off report, it's on an annual basis. Much as that you are going to audit your financial statement and other reporting activities. So this is part of the reporting activities on annual basis. So it's an annual basis exercise, not just a one-off.
Okay, it's looking like we've taken most of the questions, Shibomi, if I'm correct, because I can see that other questions are being repetitive. We have few people who have their hands raised. Maybe we can quickly take one or two people before we close this session. So if we have someone whose hand is raised, Simi, can you please allow such person?
Okay, while Simi is trying to allow them, there is one question that someone raised, which is critical, and it's for FRC. And I want Mr. Mao to answer that question. With regard to auditors, auditors too need guidelines. SEC has done theirs, SEC has issued this guideline. Auditors need, FRC now need to issue guidelines for the auditors. I could remember during the sitting of the committee, there was a document that FRC brought, which is in this regard. When is FRC issuing the guideline that auditors will use? Because if this guideline does not come before end of July, it might be a tall order for the auditors to be able to come up with one, or they might have to default to PCAOB regulation with regard to this. So Mr. Mao, you have been saddled with it. When are you issuing the document? Sorry, I'm putting you on this.
Thank you very much. If you remember when I was during the little chat, I mentioned that my ES has given us a marching order that the team should come together and come up with one. I'm assuring you very soon we'll come up with one. And like I said, we must follow due process. That's the issue. If you look at the one that SEC issued, it didn't just start yesterday. They started long ago before they get to this level. So, and we believe what is worth doing is worth being well. So all the necessary stakeholders will put together to work on it. I will follow due process for it to have general acceptability. So we are working on it, and very soon we'll get in touch with those that we think should form part of the committee to work on this document. We're working with, we're coming up with a document to present to the committee that we're going to put together. And I can assure you in a very short time, we'll get it done.
Okay, thank you, Mr. Amao, for that response. That means the external auditors should be on the lookout for the operating, for the guideline for the operators, because it will be part of what they will use to assess internal control over financial reporting for organizations that they review, and it will help them in expressing their opinion on that for that attestation. I don't know if there are other questions or people who are raised their hands, if we can quickly take that. Okay, so we have Olufemi Dosumu. Please ask your question. I think you've been given the opportunity to speak. Okay. Okay, I don't know, Simi, are you able to get them to speak?
Yes, Ibukun, they've all been unmuted so they can ask the question.
Okay, maybe they've left or probably we've answered their question. Marvel, Mimi, Julius. Okay, if we're not able to hear you, you can type in your question.
No questions.
No question. Okay, thank you, Mother. Julius, have we addressed your question?
Yeah, I'm fine, thank you.
Awesome, thank you. Mimi, have we addressed your question? Okay, we want to say a very big thank you to all our panelists, most especially our representative from the regulator, Mr. Al-Azan. We really appreciate your presence because this has made this session more enlightening for public listed companies, and they know what is expected of them from the regulator. We also appreciate Mr. Amao for representing the Financial Reporting Council, which is very critical, and some of the key things he has touched on about what FRC is doing regarding the guideline for the operators, and we should be on the lookout for this. I will not stop there. I will also thank my able panelists. Thank you so much for the wonderful insights you guys have really brought to this session, and to our very cooperative audience who have listened attentively, who have asked questions, and want to believe that we've answered your questions. We want to say a very big thank you to you. Just for you to know, for those who have registered for this session, a link will be made available to you to access the conversations that we've had today. And then where our doors are open, we're happy to support you. Like I introduced myself, my name is Ibukun Bicroft. My email address will be made available, and so that you can contact me should you need support in your transition to achieving a strong internal control framework, or even putting together a framework that will help you to achieve this timeline. Thank you, everyone, and have a beautiful day ahead.
Thank you very much. Same to you, please.
Thank you, everyone.
Thank you.
Yeah, thank you.
Everyone.
Bye-bye.
Bye-bye.
Yeah, bye.